All right, welcome to the deep dive. Today, we're exploring a really fascinating space where, traditional banking is starting to meet the cutting edge of blockchain. If you've ever wondered how we bridge the security and compliance of established finance with all the innovation happening in decentralized systems, then this deep dive into Metallicus and the metal blockchain is definitely for you. Our mission today is basically to unpack how this company is trying to merge blockchain tech with verifiable digital identity. The goal seems to be building a financial infrastructure that's secure, easy to use, and this is key compliant. So we're going to get into what makes their approach unique and why it actually matters for the future of finance, whether you're, prepping for a meeting or just trying to get your head around where things are headed.
Yeah, absolutely. And what's really compelling about Metallicus, I think, isn't just the tech itself, though that's interesting, it's how they're applying it. They seem laser focused on solving real world problems. They're pretty explicit about wanting to make Web3 finance feel as, I guess, accessible and trusted as the online banking people use every single day. And that's a pretty big ambition in the digital asset space.
Okay, so let's start right there at the core. Metallicus talks a lot about weaving blockchain and digital identity together, aiming for that secure, user-friendly, and compliant infrastructure. Lots of projects say things like that. What exactly are they trying to do that's different, especially with this heavy focus on digital identity?
Right. So at its heart, Metallicus is building what they refer to as a layer zero blockchain. And it's specifically engineered, they say, for financial institutions. Now, layer zero, it's not just a basic foundation in their view. It's meant to be this underlying fabric that kind of unifies verifiable identity and trust across different systems. Think multiple blockchains, maybe even traditional financial networks too.
Okay, across systems.
Yeah, and that's critical because, financial institutions need to interact securely across all these different digital asset networks. They absolutely require a single trustworthy source for identity and compliance, right? Doesn't matter where the transaction starts. So it's really about building that common, reliable ground for identity in what's, frankly, a pretty fragmented digital world. And that's been a huge hurdle for mainstream adoption.
That makes sense. Thinking of it as a unifying layer, not just like a base layer.
Yeah.
Okay, so let's get into the mechanics then, the practical stuff. How does this system actually work? First up, they mention on-chain data storage. So important data like identity proofs, transaction details getting stored right on the blockchain. And the word you always hear with this is immutable. For someone listening who maybe doesn't deal with blockchain daily, what does immutable really mean for trust and transparency in, say, a financial context? Are there any trade-offs with making things that permanent?
Well, immutable essentially means that once data is recorded on the blockchain, it cannot be changed or deleted, period. For financial operations, it's revolutionary for trust. Because every transaction, every identity check, it leaves this unalterable audit trail. It guarantees data integrity, basically. You literally can't go back and mess with the records, which is, invaluable for regulators, for compliance, for resolving disputes.
Right.
The trade-off, though, you're right to ask, mistakes are permanent too. So the systems that feed data onto the chain, like the initial identity verification, they have to be incredibly robust. You need to be sure that what gets written is correct the first time.
Okay, got it. And it's not just immutable. The script mentions encrypted and immutable records. That sounds like a powerful combo, doesn't it? Privacy through encryption before it even hits the immutable chain. Now, that sounds super secure for compliance, but what kind of challenges or maybe trade-offs did Metallicus have to navigate there? I'm thinking about things like data sovereignty or, evolving privacy rules like GDPR. How does that work?
That's a really critical point. Balancing privacy with transparency, especially with immutable records, it's definitely a complex challenge. Metallicus has to make sure that while the proof of an identity check or a transaction is permanent on the chain, the actual sensitive personal data linked to it stays encrypted, and it should only be accessible by authorized parties. This often involves some pretty sophisticated techniques like zero-knowledge proofs, perhaps, or really granular access controls. The trade-off is often complexity. It's just much harder to build a system that securely encrypts sensitive data while also making it permanently verifiable on-chain. And yeah, they absolutely have to keep adapting to global privacy regulations. Those rules dictate how data can be stored, accessed, sometimes even forgotten or deleted, even if the blockchain itself is technically immutable. It's a balancing act.
Okay, interesting. Let's pivot a bit to the user experience side, because that's often been let's be honest, a major pain point for broader blockchain adoption.
Yeah.
Metallicus is talking about biometric access, replacing passwords or those super clunky recovery phrases with just face or fingerprint scans. I mean, anyone who's ever lost a seed phrase knows this sounds like a huge step forward. Faster, maybe safer logins for wallets and services. How significant is this really in removing that friction for users? Can biometrics truly solve the whole user adoption challenge?
Oh, it's potentially transformative, yeah. That complexity around private keys, seed phrases, it's been a colossal barrier for just, regular people. Biometric authentication, like you see with their WebAuth wallet example, it drastically simplifies how you get access. And arguably, it can enhance security in some ways, too. It feels familiar, right?
It aligns with how people already unlock their phones or use their banking apps.
But exactly. But is it a silver bullet? Probably not entirely. While it solves the access problem nicely, it does shift some of the security focus onto the device itself. A really good system needs to ensure those biometrics are handled securely and properly linked to the underlying decentralized ID. It can't just be a simple device unlock mechanism mapped onto a wallet. But does it move the needle for user experience? Absolutely. Significantly.
Okay. And building on that convenience factor, there's single sign-on, SSO. The idea of using one identity to access many services sounds incredibly convenient, very Web2 like Google or Facebook login. But, historically, consolidating identity like that can create a single point of failure, right? Or at least a very attractive target for hackers. How does Metal ID, their system, try to mitigate those risks in a decentralized way? What lessons maybe were learned from older centralized SSO problems?
That's a really important question, actually, because the goal isn't just convenience. It has to be secure convenience. You're right. In a traditional SSO system, if that central identity provider gets compromised, bam, all your linked accounts are suddenly at risk. In a decentralized SSO model, like what Metal ID aims for, the user theoretically retains ownership and control of their identity. The authentication process itself relies more on the cryptographic security of the blockchain. It's not about one company holding all the keys in a central database.
So it's different architecturally.
Exactly. Lessons learned from Web2 breaches mean focusing heavily on strong encryption, probably multi-factor authentication baked right into the protocol itself, and often using non-custodial approaches where you, the user, control your private key, not some third party. This really helps mitigate that single point of failure risk by decentralizing the ultimate root of trust. It should be much more resilient.
Okay. And then finally, on the operational side of things, they talk about transacting with verified parties. This means essentially every wallet or user on the Metal blockchain can be verified, identified via a digital ID. Why is this specific feature so crucial for actually integrating traditional finance with DeFi? How does having this layer of verifiable identity fundamentally change things for banks looking at this space?
Yeah, this feature is arguably the cornerstone. It's what could really attract traditional financial institutions into the Web3 world. Think about it. TradFi operates under incredibly strict Know Your Customer, KYC, and anti-money laundering AML rules. Without some form of verifiable identity, a bank simply cannot legally or safely interact with an anonymous blockchain address. It's a non-starter.
Right, compliance blocker.
Totally. So by ensuring every participant can be verified through a digital ID, Metallicus provides those necessary regulatory assurances. It shifts the environment from potentially anonymous or pseudonymous to one where institutions can feel confident transacting, knowing they're dealing with, real, trusted individuals or institutions, as the outline puts it. This fundamentally changes the game. It enables what you might call compliant DeFi, and that could potentially open up huge pools of institutional capital that have basically been sitting on the sidelines because of all that regulatory uncertainty.
Okay, so let's try and tie this all together then. Why is Metallicus's whole approach here considered significant for the financial world, maybe even beyond? I mean, lots of projects talk about bridging TradFi and DeFi. What's the specific impact or, the differentiator of their Layer 0 identity-first design that might actually accelerate this integration? What makes it stand out?
Well, the stated goal, like we discussed, is aiming to make Web3 finance feel as easy and trusted as modern banking. That's the big picture. Their specific differentiator, I think, really lies in prioritizing identity right at that foundational layer 0. It's not treated as an add-on feature. It seems baked into the core architecture from the start. And this inherently makes it regulatory ready, or at least designed to be, right from the ground up. Built to comply with global rules like KYC-AML. That's a major hurdle, as we said, for many other blockchain solutions trying to attract banks. This vision also ties into what they call the digital banking network. They seem to envision this whole ecosystem where banks, maybe even governments, payment apps, can all interact seamlessly and compliantly using the shared identity layer. And what's potentially fascinating there is the possibility for really widespread adoption across different sectors, making blockchain-based financial services genuinely accessible and crucially compliant for potentially everyone, not just, the early crypto adopters.
And there you have it. That was our deep dive into how Metallicus is using the Metal blockchain and this idea of digital identity, trying to create a financial future that aims to be more secure, compliant, and accessible, really trying to merge the best parts of the traditional and decentralized worlds.
So here's something to think about as we wrap up. If digital identity on the blockchain can truly make Web3 finance as trusted and easy to use as modern banking, what do you think the broader implications are for things like individual ownership of data, for privacy, and how might this kind of technology really reshape the future evolution of financial services across the globe? What stands out to you listening right now as the biggest potential shift this technology could actually bring?